I've been using Robinhood for around 2 years now, and there have been a lot of changes to the platform during that time. When I first started buying stocks on Robinhood, we could only place simple orders like limit orders, market orders, stop losses, but there were really no fractional shares and especially pre-IPO access. And I'm about to explain what pre-IPO access is and how you can take advantage of this new feature of Robinhood, how I took advantage of it, and how I doubled my money in less than a month. Let's get started. I'm going to share some statistics about IPO stocks that are going to blow your mind. On the first day of trading in 2020, the average return of IPO stocks was nearly 42% in that one day. The thing is, all of the normal investors like us, the retail investors, didn't have access to the IPO stocks at their IPO prices. So by the time we were able to see these stocks on Robinhood, they were already much higher in price. They were already priced in that IPO pop, which is why if you were to look on Robinhood, you're going to see $68, which is the IPO price, and then you're going to see no movement over there. And then you're going to see $144.71, which is the price that it closed that day. Now, you're probably thinking, if I was able to buy Airbnb at $68, I'd put my whole portfolio into it, because you know it's a great company and this is a great deal for the stock price, which is why so many institutional investors were buying it at $68, but we didn't have access to the shares. So this new addition to Robinhood, which allows investors to get in at that price that usually only institutional investors can get in, is really beneficial. So when I finally received an email telling me of this new IPO stock that I'd be able to invest in, I right away decided that I wanted to experiment and see how much I would make on the first day. The name of that company was Figs. I've seen ads for Figs on the subway here in New York, and I had a general idea of the company, but before I put my hard-earned money into this company, I still wanted to do some research. I read a lot of articles about Figs, what they do, and why they are a good company to invest in. How they could be the Lululemon of medical scrubs. How they were creating comfortable clothing for doctors and nurses. This could be a business that grows naturally, because when buying an IPO stock, you want to know that it's going to continue growing even after that first one-day pop. You don't want it to go back below the price that you bought it at IPO. With Robinhood, there's a restriction of selling shares that you bought at pre-IPO prices for the first 30 days of owning it. If you do sell your shares within those first 30 days of trading, you're going to be banned from buying pre-IPO shares for the next 2 months. You don't want that to happen, so you want to be comfortable holding your company for at least a month when buying pre-IPO shares on Robinhood. So what happened on that first day of trading for my Figs shares? I placed an order to buy 5 shares of Figs at their pre-IPO price, which was around $17 to $21, and I got filled at the price of $21. And on the closing of that first day of trading, Figs closed at $30, which means that I made 36% on my around $100 investment in the company in one day. And when I tried to sell it, again, I saw that notice saying if you sell within the first 30 days, you're going to be banned from buying pre-IPO shares for the next 2 months. So I decided to hold it. And I held for the next 2 days, and after 2 days of holding Figs, I was up over 50%. After a week, I was up over 60%, and in less than a month, I've doubled my money. Now here's the thing when buying pre-IPO shares. Not every single person who applies for pre-IPO shares is going to get filled. For example, with Figs, there were around 124,000 people who applied for pre-IPO shares, and around 18,000 people got filled. And those people that did get filled did not always get filled for the amount that they requested. I probably got filled for my total amount because it was such a low amount of shares. For 5 shares, and around $100. I then decided to test IPOs further by placing a much larger order for the next IPO I got access to, which was Clear Secure, trading under the ticker YOU. With this company, I decided to place an order for around $1,000 worth of the stock on day one to see if again we'd see that 30% pop on the first day. Although, like I said before, not every person can get filled on a pre-IPO access stock. And in this case, I didn't get filled for a single share of Clear Secure on IPO day. And it did indeed open up over 30% of what I was going to pay for it. So I did miss out on around $360 worth of gains on the first day, and it continued to increase and went 58% up in less than a month. Right now it's pulled back a little bit, but it's still up greatly when compared to the S&P 500 or my portfolio. What's my strategy when dealing with pre-IPO stocks? Given the average return of IPOs on the first day of trading, I decided that from now on, whenever I get the opportunity to purchase shares pre-IPO in a company that I believe in, I'm going to be putting a large percentage of my portfolio into that company. And if I do get filled, great. If not, there will be more opportunities for me to get in pre-IPO. This is just one way to make money on Robinhood. There are many other ways to make money in the stock market through investing and through other side hustles, which I will be covering in future videos. I really hope that this video helped you understand how to make money on Robinhood using IPO Access. But before you go, please hit that like button if you found any value in this video, subscribe for more content, and hit the notification bell so you never miss out. And I'll see you in the next one.